and welcome to the Wealth Hub podcast. I'm your host, Sharon Tomushabe. And in this episode today, we are very excited that we're going to learn about customized investment plans. And we're very honored to have a guru in the industry, an advisor that has been doing investment advisory for quite some time now. Elijah, thank you so much for joining us today. And I would like you to go ahead and introduce yourself to our viewers and listeners.
Thank you, Sharon. It's both an honor and a pleasure to be here. And not only is this timely, but it is relevant. Yeah, I can't think of a better time and a better place to actually have this kind of conversation. It's really, really meaningful. My name is Elijah Muchunguzi. I am an investment advisor at Zeno Management Limited. And we help you to plan, save, and invest for your financial goals. And to our viewers, it's my hope and prayer that you pick out something, even if it's just one thing. It's not just a matter of hearing, but let it cause you to take action and make meaningful investments.
So Elijah, just to get into it, how does an individual get advice, or how does an individual start on their investment journey, and why is it important to customize your investment goal?
So I'll just break it down into two. With investments, we look at generic. I would just take it as a generic view. So we'll look at your risk attitude and your risk capacity, and also what we call your time horizon. With risk capacity, it is basically how much risk one can take in a certain investment. With risk attitude, it's basically your attitude, your mental attitude towards risk. Yeah, how do you think about it? In case you made a loss, would it really give you a mental breakdown? Something of the sort. Yeah, and then lastly, it is on the time horizon. With time horizon, it's how long you are planning to invest. Now, with these three things combined, as advisors, we are able actually to help one come up with a customized investment plan, because we have short-term goals and then we have the long-term goals. Yeah, and with the short-term goals, we have to get to know how much money you are actually going to start with. Your risk capacity then now comes in. How much risk are you willing to take? If you're someone that is fears, making a loss, then we know how to advise you. If you're someone that is open about taking risk, then we know how to advise you in which sector to actually invest this money. Planning, yeah.
So what we are learning today is that it's important for you to know what your goal is, what kind of risk you can take, and the attitude towards risk.
Yes.
We shouldn't just invest our money, but we should have all those things taken care of.
Yes.
Risk appetite, attitude, and the time, the capacity. So it's actually a lot that goes into what kind of investments you can make.
Yes.
So take us through, if I'm an individual and I want to invest my money, what does it take to customize my goal?
So for an individual, just as we had said, we are going to look at your risk capacity, attitude, and time horizon. However, we do need a foundation, yeah? And with that foundation, we're looking at things like emergency funding. No matter what, you're going to have an emergency. Yeah, it's going to happen. So at least if you do have an emergency fund set up and you have saved up for maybe quite a while, that is a foundation you have set yourself. Yeah. So after doing that, you can then go ahead and then have other short-term goals, like maybe a travel goal, maybe land goal, etc., and then have the long-term goals, which are like retirement. Yeah. So the whole thing is have a foundation that you are standing on, that in case anything happens, you have something that you can fall back on, and not rather going into your long-term investments like the retirement account or maybe your land investment account to actually pull out money to fund your emergency. So that is very, very important for the individuals to have.
And then when it comes to families, because we know usually family is the first place you run to when an emergency happens. Why is it very important for families to actually customize their own investment goal?
So with families, the good thing, we're still dealing with individuals here. The major thing here is at least every family must have an emergency account.
As a family.
As a family, it must be there. Because no matter what, someone is going to pass on, someone is going to fall sick, someone is going to have an accident. The things that we can't rule out, they are meant to happen one way or another. Yeah. So as a family, if you're actually looking at setting up an investment account, it's the first thing you actually need to start on. And afterwards, you can maybe look at going into business and different other investments that you like to do as a family. But you need to do research. That means you will need a professional investment advisor for those other investments too. Yes.
What kind of investments do you actually encourage people to invest in? What is your specialty?
So I am into financial assets, and that is the likes of the government bonds, corporate bonds, and then we have the treasury bills, then we have the equities, which are the stocks. Yeah. So just to give you more of expansion on that point now, this is where I read that real estate is actually number 3 in terms of assets that are literally making returns for people, good returns. And the first one is actually the stocks. And if you to go like, let's say to the US, the wealthiest people are measured by their stock, the amount of stocks that they actually hold in these different companies, and not actually the buildings that they hold. They have.
But we also know that stocks are very high risk investments.
Yes.
You're going to invest in a business expecting to get a return and dividends, or maybe share prices going up. We've also seen people lose a lot of money on the stock exchange.
Yes, yes.
What kind of investor should be ideal to invest in stocks or equities?
That is where the capacity comes in. Is your pocket heavy enough to take in
risk.
That loss? I'll give you an example of the gentleman of Tesla. Forgotten his name.
Elon Musk.
Elon Musk, yes. So he had invested into his own company, Tesla, about $25 billion. Actually, more than that, but he lost about $25 billion in that.
So imagine losing
stocks.
$25 billion.
Yes. But you see, the benefit about our kind of industry is that the regulations tell us to only invest 25% of people's money in one asset. That means we still have 75% to work with. Yeah, we're going to go ahead and diversify it again, go into the bonds, go into the treasury bills, and etc. Yeah, so it is not in one place.
Okay.
And because of that diversification, a client is actually protected, so that even if one asset was to go down, at least his other assets are able to cover up for that loss. Same thing if you want to do it individually, yeah, and you don't really want to go through a company. I mean, registered financial advisors or chartered financial analysts. You can then just make sure you're diversifying. Diversify not only in one, but like have multiple areas that you're actually putting your money.
Perfect.
Yeah.
So customization is going to help us to select the kind of assets that we should invest our money in. I'm seeing stocks. Probably stocks are for people that are high risk investors.
Yes.
Stocks are for people that are investing for a long period of time.
Yes.
And people that are willing to take a loss for high
gain, for a
possible high gain.
Yes.
Okay. So when it comes to companies,
yes,
how do you help companies customize an investment plan?
So for companies, the first thing I always ask is what do businesses do with their profits? Yeah. So you find that most businesses are either investing back into the business or maybe increasing salaries and etc. Yeah. But I would really advise that they diversify slightly away from their business. Yeah,
invest in other things.
Yes,
to spread the risk.
Yes. So when you are when you put money back into all the money that you've gotten back into the same business, you're actually putting yourself at a very high risk, because if that business is to crash, you lose everything. Yeah. So what I'm actually here advising for the businesses is to actually create what we call a cash reserve. Yeah. So you can either open up a money market fund, a bond fund, etc., that you're actually stocking money away for an emergency, because emergencies do happen.
Even in businesses.
Yes. Because we did have COVID. companies had to shut down, close operations, close shop because they didn't have reserve accounts. So reserve accounts actually very, very important. And why I am so much emphasizing with, let's say, with the money market funds or a unit trust fund is that you actually have the ability to liquidate whenever you need that, whenever you need cash. Yeah.
So every time you need cash, you can access your money.
Yes.
How long does it take?
It could take you between 24 hours to about 72 hours. So it's like 1 to 2, 3 days. 3 days. Yeah.
1 to 3 days.
Yes.
Your money is back.
Yes.
So what kind of advice would you give to our listeners that are listening to you today?
So it's very, very important that you have a customized investment plan. And you must actually, investment plan has to come from a goal. So you have to have a goal in mind that you would like to achieve. Yeah. The moment you know the goal that you actually have, then you will know what time horizon that you need to take to achieve that goal. And then that is how you will actually come up with a customized investment plan. But ensure that you seek professional help before you go into these different investments, so that in case anything is to happen, you've gotten advice from these investment advisors. Yes.
So tell us about Zeno. How is Zeno helping clients or helping people customize their investment goals?
Thank you very much. So with Zeno, currently we're having over close to 80,000 clients that we are helping. And each of them is unique. That means each of them has a unique customized investment plan. And how Zeno is actually helping them is that we have made it quite easy for everyone, number one, to start saving. With Zeno, we have set up a platform where you're able to choose a financial goal that you'd like, right from the individual to the institutions. You can choose a financial goal that you'd like to invest for. And as you're saving towards that goal, we are helping you to invest that money in low risk assets. Not no, but low risk assets. If you're someone that you feel like you want to take a little bit more of risk and you have a bit of cash to spend, then we could also get into the stocks and invest into the stocks. Yes. So with Zeno, that is what we do. And then the returns are on a daily. These returns are then compounded on a monthly basis. And so you're actually able to see that your money is actually growing. If you're to leave money in the bank, yeah, you're actually paying the bank to keep for you the money. Yeah?
Yes.
You're paying a bank to keep for you the money. But if you had opened up a fund with Zeno, that money is actually growing on a daily basis. And whenever you need it, it is there for you. But at least I've invested my maybe 100 million shillings. The next time I'm pulling it out, it's maybe like 110 million.
Perfect.
Yeah? That is really a growth that I would really want the Ugandans and also people around to really invest in and try out.
So basically what we're learning is that for every investor, you have different goals, you have different needs, you have different risk appetites. Then you to invest in something that is not personalized.
Yes.
It is better for you to do something that suits your goals, your needs as an individual.
Yes.
And then that's what Elijah helps you do as an
Yes.
advisor.
Yeah.
Would really appreciate that you're giving us this kind of information. And how do people get in touch with you? Where are you located? How do people set up these accounts? How do they get this advice? If somebody's out there and they want to reach out to you, how do they get Elijah?
So our offices, Zeno offices, are at Workers' House, first floor, or at the NSSF building, first floor, northern wing. You can just come and ask for Elijah, or any advisor there is able to help you. Yeah.
Why would someone trust you as a fund manager? Give us those things, why people should trust you with their money.
So, just as I said, we are licensed by the Capital Markets Authority of Uganda, but also licensed by UBRA, that is the Uganda Retirement Benefit and Regulatory Authority. And we have these, under the Capital Markets Act, we have these guidelines, or what we call the conduct of business, which we run by, yeah? And those rules and regulations were set up to actually protect the client. And we are literally have to follow those rules step by step to make sure that these clients are served, but also protected. And just to say, we are even safer than a bank.
Why is that?
We are safer than a bank. So a bank is protected by the Deposit Protection Fund.
Yes.
Yeah, and they will protect you up to 10 million shillings.
Okay.
Up to 10 million. So if you have 100 million, you have the risk of losing about 90 million.
It depends.
Yeah, it depends. Yeah. But that is but there's that risk. Because if a bank is to go down, it may go down with all your money.
Okay, talking about banks going down, we saw EFC being liquidated by Bank of Uganda.
Yes.
And Bank of Uganda put out a statement saying all the savers are going to get their money. Thank God it had not yet gotten to a level where savers could potentially lose their money.
Yes.
And I really give Bank of Uganda a kudos to
Yeah,
say thank you so
did
much
well.
for protecting our money. The Deposit Protection Fund also did quite well. Yes, it says 10 million, but sometimes these banks have assets.
Yes.
So they liquidate, they sell those assets, and then each saver is able to be paid. But should things go south and these assets are not able to pay back,
Yes.
that's when somebody can actually make
A real loss in a bank.
Yeah. And now tell us about the structure of how a unit trust fund is set up.
So for a unit trust, we do have what we call the regulators. This is where you have Capital Markets Authority, and then we have the trustee. For the trustee for Zeno, we do have KCB Bank that is ensuring that we are complying to what the promises that we have made to our clients. Are our clients happy? Are we investing the assets the right way? etc. That is where KCB comes in. And then lastly, we do have a custodian. That is I would say it is an institution that holds clients' funds as they are being invested.
So Zeno never takes clients' money.
No, we
It's
don't.
not on the Zeno's balance sheet.
No, it is
So
not.
should Zeno go down, the money is safely kept on a custodian account.
Yes.
And your custodian is?
Stanbic Bank.
Stanbic Bank.
Yeah.
So that's the protection that people have.
Yes.
That the fund manager's role is separate
Totally separate.
from the person who holds the funds.
Yes.
So what you guys do is research and the investment decision,
yes.
but not holding clients' money.
We don't.
Okay. So at
Yeah.
least that really makes it a bit safe.
So clients are really, really very protected on our end. And we do, and under the capital markets regulation, we have what we call the law of separation or segregation, whereby clients' money is literally held in a different account from the operations account for the business. And if a fund manager is to go down, they will then just, the Capital Markets Authority will just get another fund manager, and these accounts are then transferred to a new fund manager.
Okay.
Yeah.
We want to thank you so much, Elijah, for coming on the show to share all this knowledge. What are your last tips to somebody listening to you?
So my last tips are, number one, make sure that you have a goal, an investment goal. Secondly, stop commingling your funds. I'd almost missed saying that. Don't commingle your funds. So have a savings account that is separate from your investment account, so that you can actually keep tabs of what is actually going on. Like any other business, have accounts that are literally separate. Your personal account should be separate from your business account. You keep tabs. You actually know what is happening in your business. Same thing with a person or an individual. Have an investment account that's separate from your savings account, so that you know how you're actually performing. What is the progress of my goals? How is my investment account working? Yeah.
Thank you so much, Elijah.
You're welcome.
And for you who is out there and listening and viewing us today, we would love to encourage you to subscribe to our channel. Leave a comment. We'll be having so many special people like Elijah that are very well knowledgeable about investment to advise you to ensure that you're making informed decisions. As we come to a conclusion and to the end of the show today, would love to say thank you so much and have a lovely